The biggest move we're going to see in gold is going to happen when Americans are still asleep. It's going to get started in Asia. And so Americans are going to wake up to this crisis. People are looking for safety, and they no longer consider the dollar to be safe. They no longer consider treasuries to be safe. Gold could hit 3,000 this year. In fact, if it continues on its current trajectory, because remember, we're not even finished with the third quarter yet. We're almost there. But if you take the gains in the first three and extrapolate them into the fourth, we're pretty close to 3,000.
Gold retreats from record highs, but secures a 1.8% weekly gain as Fed rate cut expectations fuel a bullish outlook. Anticipation of another rate cut this year pushes gold prices upward, with markets pricing in a 51% chance of a reduction in November. A weakening U.S. dollar for the fourth consecutive week further boosts demand for gold and silver, making them more affordable for international buyers. Economist and gold advocate Peter Schiff says gold is set to have its best year since 1979, when it rose 126%. He believes the biggest surge in gold prices will likely begin in Asia while Americans are still asleep, leaving them to wake up to a financial crisis. Schiff predicts gold could reach $3,000 this year if it maintains its current trajectory, noting that gains from the first three quarters already bring it close to that mark. The greenback began pairing losses after data showed U.S. weekly jobless claims fell by 4,000 to a four-month low of 218,000, below the 225,000 forecast by economists polled by Reuters. Against the Swiss franc, the dollar weakened 0.27% to 0.848 after the Swiss National Bank reduced interest rates by 25 basis points, echoing the moves by the Fed and European Central Bank, ECB, and left the door open for more rate cuts as inflation cools sharply. Peter Schiff mentioned that this scenario is bullish for gold. He emphasized that when investors start rushing to buy Swiss francs and yen, it reflects a loss of confidence in the US dollar as a safe haven. Instead, people are selling dollars to purchase gold, Swiss francs, and yen, which further drives up gold prices. Schiff concluded that the real reason behind gold's recent rise is the anticipation of more quantitative easing, QE, even though mainstream analysts continue to trust the Federal Reserve and fail to grasp the seriousness of the situation. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
You know, the dollar index, even though it was down on the week for the fourth consecutive week in a row, we had a falling dollar index, which is also bullish. The dollar index closed at 100.42. But in particular, the dollar was very weak today against the Swiss franc and the Japanese yen. We're barely hanging on to an 84 handle against the Swiss franc. And I think the fact that you're seeing this kind of weakness relative to the Swiss franc and the yen, right? These are the currencies that are perceived of as like the safe haven. They're really talking about the Swiss franc, because the Swiss franc is a lot less dirty than the US dollar, but also the yen. People tend to buy yen when they're worried about stuff. And the fact that people were rushing into the yen today, rushing into the Swiss franc today, that shows me that there's a lot of nervousness out there about the dollar. And the dollar is not a safe haven when people who own them are selling them to buy Swiss francs or to buy Japanese yen or to buy gold. That's why gold is going up, and that's why the Swiss franc is going up. People are looking for safety, and they no longer consider the dollar to be safe. They no longer consider treasuries to be safe. Again, treasury yields did go down slightly on the week, but you could barely notice the change. And in fact, since the Fed cut rates, yields on 10-year and 30-year treasuries, they've gone up. And they're going to go up a lot more. That's why I know the Fed is going to go back to QE, because the Fed wants lower interest rates. That's why they cut rates. Why do they want lower interest rates? Because they know the economy's in trouble and they want to rescue it with lower rates. So they cut the Fed funds rate, but it didn't produce an effect on the long-term rates because they had already discounted those cuts before they happened. But now that they have happened, long-term rates are going to head higher, and that is going to confound the Fed. They want them lower. And the only way they're going to get them lower is to return to QE. Now, there are people, I mentioned this, I think, on an interview, you when I said I thought when the yield on the 10-year Treasury is back above 4%, that's going to result in the Fed going back to QE. And they said, well, but they got to 5% and the Fed didn't do QE. That's true, because then the Fed wasn't as worried about the economy as it is right now. The Fed was still hiking. But now that they're cutting, it's because they're worried about the economy. And so therefore, they don't want interest rates to go up. They wanted interest rates to go up back then. They don't want that anymore. And so when interest rates go up, when they want them to go down, they will go back to quantitative easing. And that, again, is the real reason that gold's going up, because the gold market is looking forward to QE. And the people in the mainstream media who are looking at it still don't get it. They still trust the Federal Reserve.
Fast forward 9 months to the present day, and definitive evidence shows that gold is not just having a great year, but in fact, the world's favorite precious metal is having its best year ever. As gold prices resume their epic run, scaling new all-time record highs on a back-to-back weekly basis, it's fair to say that we're watching history be made as the yellow metal continues to charge towards unprecedented new heights. There is no denying that there has been considerable excitement in the gold market this year, with the price soaring above $2,600 an ounce for the first time ever. Peter Schiff emphasized that gold's current surge is a significant warning, much like in 1979, when gold soared over 120%, only for the Federal Reserve, under Paul Volcker, to hike interest rates to 20%, which ended the gold bull market. Schiff predicts that this time, gold could rise another tenfold from its current levels, just as it has increased tenfold since 2001. If it follows this trajectory, Schiff estimates gold could reach $27,000 within the next decade. Let's now turn our attention to the video again.
Gold now is up, I think, around 28, 29% on the year. We're on pace, again, for the best year for gold since 1979. That's 45 years ago. So this is a very rare event to have gold this strong. This is not insignificant, and it's not like there's no connection between what the Fed is doing. They're cutting rates when they're already too low. The Fed has never started a rate-cutting cycle with the stock market at a record high, the real estate prices at record highs, the gold prices at a record high, supposedly low unemployment. The Fed has never done this. They normally wait for something bad to happen before they cut rates. Now they're cutting rates to prevent something bad from happening. They're so scared that the bad thing that's going to happen is going to be so awful, they can't even wait for it to happen. They have to act preemptively, right? They weren't willing to act preemptively to stop inflation, right? They wanted to make sure it was well above 2% before they did anything. But when it comes to helping the economy, they don't want to take any chances. Gold going up like this is a significant warning. But again, when this happened in 1979, when gold was up, it was actually up over 100%. It was like 120, 130%. But in 1980, that's when Paul Volcker said, no mas, right? The buck stops here. Interest rates went to 20%. So after we had that big year in 1979, that was the end of the gold bull market, because the Fed did what it needed to do. And we could afford it at the time. We could afford those really high real interest rates. We really had tight money when rates were at 20%. The Fed never got there, but Volcker got there. Well, what are we going to do next year? Is the Fed jacking up rates? No, they're cutting rates. And so this is not the end of the gold bull market like 1979. This is the beginning. This is like 1971. We are just getting started. Gold just broke out. And remember, gold is up now about tenfold since 2001 so far this century. It's up 10 times. I think it's going to go up another 10 times, but it's not going to take 20 years. It may do it in 10 years. And so where's gold going to be if it goes up 10x from here? Well, if it's 2,700 now, that's 27,000. Now, I know that sounds crazy, but believe me, 2,700 sounded crazy 20 years ago when it was 270. And in 1971 or 70, it was 35. And in 1932, it was 20. Right? So look where gold is. But gold is going up. Now, the Fed's balance sheet is almost 10 times as big as it was before the 2008 financial crisis. Money supply is exploding. That's why the price of gold is going up. In fact, the price of gold is not going up. The value of our money is going down. And if it's already gone down this much in the past, imagine how much more it's going to go down in the future when we have much bigger deficits, when we're going to be printing even more money. The Fed's balance sheet is going to explode, right? Over the next 4 years, because it's already going. The deficits are already rising, and we haven't even officially started the recession.
Gold is on a remarkable streak. With ongoing geopolitical risks and a strong likelihood of further U.S. rate cuts, the near-term outlook for gold remains bullish. The dollar's persistent weakness, coupled with market expectations of dovish monetary policy from the Federal Reserve, is likely to drive gold prices even higher. Since last October, gold has experienced a parabolic rise, rallying from around the $1,800 level to achieve all-time highs, not just once, twice, or 3 times, but on 37 separate occasions in 2024 alone. Notably, gold has outperformed Bitcoin, the S&P 500, and the Magnificent Seven stocks during this period. What are your price projections for gold over the next year? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.